What is going on, guys? Trying to come back at you from Easy Stock. Today we're going to be going over our top 3 plays of the week. 2 stocks and 1 option play. Without further ado, let's get into how we did last week. So last week we opened up talking about ELA and how the RSI was getting really low. Play ended off paying off big time, going up a 26% run all the way up to $4.60 before validating out and recovering back down. Our next play that we called out was none other than Zoom, sitting around 246, and it went all the way up to 271, about a 10% gain there on that play. And going into our last trade, here we go. And our last play we called out was CRM. We called it out about 187 there, waiting for that reach up on that RSI, and it was a pretty decent play, a measly 5% or so run up to 196 before kind of flatlining out. But again, that's what we said it was going to do. And now let's go into this week's plays. All right, guys, so our first play of this week is going to be Intel, ticker symbol INTC. As you can tell, it really took a huge beat down on a bunch of news recently. And look at that RSI. If you guys know what the RSI is, it's down there extremely low. It was chilling around that 60th range. It was holding very steady, and now all the way down to that 50, 49.50 was the lowest. It was chilling at that 50 mark. If you want to take a look at the 1-year chart, again, we've had pretty steady growth, and then we had the quarantine come into effect. The lowest, again, keep in mind, dropped down to 43.63, and right now it's chilling around 50. So it's almost down to the lowest it's been all year long because of that bad news. So look for a little bit of a recovery play as we move into this week and next. All right, guys, our next stock going on, ticker symbol PBR. This is a petroleum-based company from Brazil. And it's had a very steady increase here. If I get rid of all my indicators right now, you'll be able to see this as it works up. It's had very consistent growth. This is the 1-month chart right now. So following up that trend, right now it's at the bottom of that basically that trend line. So again, I feel like it's gonna be popping up here as we go throughout this week. But not only that, again, here's the 5-year chart, low of $2.70. It's had pretty consistent growth, holding relatively safe between $13 and $15. You can see this kind of V-shaped recovery working in right now, especially if you come into the 1 year, you can see that it's very consistent growth. Not only that, we had a call option, $400,000 worth on the 10/16 expiration date for $11 on this company. So somebody's got a ton of money going on, maybe insider info. You never know. It's Brazil. It could be a little sketchy. I'm just kidding. But still, anyways, going to be a good look for a long-term hold if you're looking to get a long-term stock for this week. All right, guys, so our last play of the day is going to be ticker symbol SPY, also known as the SP 500. So again, if you guys know anything about the market, we had this huge dip again from quarantine, just about like any other stock in all of the economy. It's had a pretty nice V-shaped recovery as we come up here, but if you've been looking at, if you're more of a pattern person like I am, you can see that these nice dips come by some, it's almost like a wave format going on right now. You'll have some nice little peaks and you'll dip down. And it seems like right now we're coming into a little bit of a dip. Finding that bottom right here, the RSI was dipping up pretty high up there in the 70-ish range. Now it's come back down to that fair value. So my play for this is going to be to sell a put below. All right, so playing off this little wave format going on, it seems to be it's going to be testing this support line roughly around 320. So if you want to be a little riskier, you can sell a put around that 315, 316, somewhere in that mark, and have it for a very short expiration date. If you want to be a little more safe, you can come down this next point of contestment there around that 311, 310 mark and set it right below that 309 or 310. So now if you're looking to do this in Robinhood or some other app, trading the options, you want to go to the expiration date. I'm just going to go, for example, July 29th because I want my money really quick. So if, for example, when we're in Robinhood here, we go to the 314, we'll go ahead and select that. And we'll go ahead and buy the one right below it. Oops, didn't mean to click that, but we'll buy that. This will give us a put credit spread, which will be making 14% of whatever we put in because the difference of the 2 strike prices will be your max cost, which is $100 minus that 14 because you automatically get that. So you're going to be risking about $86, but your profit's going to be $14 for every one of these contracts that you make. So again, obviously, though, on your risk tolerance for this, you can go even lower again, that 310, 309 mark that we talked about earlier. You'll only be making around 6% or so per 100 that you put in, or $6 per 100. So again, it's about half the profits there, but again, it's a lot more safe. And especially for such a short expiration date of only 2 or 3 days out, it's going to be a good money if you want to do this 2 or 3 times in a week. So again, guys, that's going to be my list for this week. Let me know what you think down in the comments below. As well as if you have any suggestions on any videos, let me know. And I will see you guys in the next one. Have a good day. Peace out.